Okay, Egie, a better showing for the markets. I mean, I think for much of the last few sessions, we'd seen investors holding back, the markets trading downwards, but a lot better showing this week. What's revived interest in equities?
Well, I think you had probably close to 10 down days. So after such a big drop in the index and in a couple of good names who were really being punished unfairly, a number of the buyers have come back. At the same time, you've had one or two results released that might bring confidence back to the market.
Confidence is going to be buoyed by a variety of things. I mean, macro factors, but also yields in the fixed income markets, fairly attractive at the moment. But in recent months, we have seen investors still holding back despite these attractive yields. What are the trends now?
Well, I think in terms of the fixed income market, particularly the federal government bond market, the yields this year have fluctuated. But ever since the end of June, when the foreign investors were allowed to hold their investments short term, in the past they had to hold them for at least 1 year. Ever since then, yields have dropped significantly, probably 150 basis points. So, so far, I'll say that the fixed income market is still attracting a significant amount of money, and it's proven to have had better returns than the stock market year to date.
How's that going to impact on the DMO's auctions next week?
Well, the DM auction next week is an interesting one because a lot of liquidity has been pulled out of the system in the past 2 weeks from the foreign exchange auctions and also some cash calls from NNPC JVs. So really, there's very little liquidity in the system, but hopefully on Monday or Tuesday, you'll have the federal allocation released. If that happens, then a lot of that liquidity will hit the DM auction, and we should be looking at yields of around 11% for the 5 and maybe about 11.3 or so for the 7. What I think will be different this time compared to last month is that the 80 basis points difference between the May 2018 bond and the April 2015 bond will be dramatically reduced. The secondary market has the difference of 15 basis points now.
Yields declining, equities seem to be recovering this week, but it has created a quandary for investors not knowing how to allocate their portfolios. What would you say? Because many companies need capital raising strategies at this point in time. With a market that's been subdued, how are they going to approach things?
Well, for companies that are trying to raise money, yes, the equity market in Nigeria has not had a lot of IPO or public offering activity. One or two companies have come out with rights issues where shareholders have the option of maintaining their shareholding. But in reality, just capital raising via equity has been weak. One option for a lot of companies is to go via debt, unsecured debt, subordinated debt, debt with various options like moratoriums and things like that. Not many people have explored those options. One or two companies have. But in an environment where it's very difficult to sell any kind of equity issue and where business is still going on, company results are improving day to day. The fixed income option with some subordination is something that companies should be looking at.